Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. I want to talk to real estate investors thinking about the Oklahoma City market. And before you put your money out for this or any investment that you might make, I want to discuss something with you that's not discussed enough, and that is risk management. Anytime you put your money out in an investment of any kind, expecting a return on investment, there's risk involved. And that is something that you should discuss with the person that you want to trust. And so what I want to go into today is how you and I are going to go into this together so that you feel confident about what's going on here in Oklahoma City. Now, the first thing that we're going to talk about is what should we base our investment on? What is your expectations and your philosophy? You know, part of the problem I see with high-risk investments is something I saw previous to 2008, and that was when people base their investment strategy on appreciation. I want to go to the highest appreciating market. Well, that's okay. That's okay as long as there's cash flow. So understand this, the low-risk way of looking at real estate is positive cash flow that comes in, month out. That's a basically bedrock type way of looking at low-risk investment. Appreciation can be something that's very, very hard to predict 5 years down the road. Market cycles happen, as we've seen. Things can happen in a particular city or a state that may affect the values of property. And so we want to go with what we know if we're going with low-risk investment, and that is cash flow versus appreciation. What we want you to have is both, obviously, but if you're looking at low risk, it's going to be cash flow. If you're looking at high risk, it's going to be basing it on appreciation. Now, the second thing you and I are going to discuss is how much money should I put down on the house? Because right now, Fannie Mae is going to require on your first investments a 20% down payment. Now, that's not high risk, especially with the values that I think are very, very real in the Oklahoma City market and a lot of markets throughout the United States right now after the meltdown. And so 20% is not what I call high risk. But your philosophy is the one that matters. And I have people putting 30, even 50% down because they want to protect themselves against the downside. They want to pay their investment off earlier. So starting at 30 years old versus starting at 55 may affect the way that you look at risk and how much down payments you're putting down. I don't want to tell you there's a magic number here, but I want to discuss what is something that is acceptable to you that allows you to sleep at nights. And so we're going to look at the risk in terms of the down payment. Now, the biggest risk that you can take in real estate investing is trusting without verifying. You know, I don't expect you to say to me, you know, Joe, just tell me what I ought to do and I'll just buy whatever you want. You know, I think I am that kind of a trustworthy person, but, you know, basically I wouldn't trust anybody myself that much. I want to know what the market is about. So if I say, you know, I want you to buy this $140,000 house in Mustang, Oklahoma, Mustang schools, you know, in this particular neighborhood, I want you to ask me, why do you recommend that? What are the factors there? What is the employment that's going to come into this? What kind of a renter am I going to getting? Is this phase one of 3 phases where I'm getting the best deal because phase 2 and phase 3 go up? These are questions that you and I are going to discuss. We're going to discuss the type of market Oklahoma City is, historical data, where we think we're going. All these factors are going to make you a much happier, informed investor. And then at that point, you can say, yes, I trust this guy. So not knowing the market is a high-risk strategy. I want you to have a low-risk strategy, which means that we're going to talk a lot about the market. Now, not apportioning risk as you're going along with your investments is another way of having a high-risk strategy. You know, I don't go to Vegas and put everything on red and just say, you know, roll it, and if I make a lot of money, that's great. Otherwise, I lose everything that I have. You want to build a solid foundation in your investing. That's a low-risk strategy. And as you build up your reserves and your cash flow, and you're buying a little bit more and more, you may take a flyer on something. You may say, well, I'm going to go into that city because I heard it's a city on the rise, or I'll go into that neighborhood and I'll be a pioneer. Now, I know right now there's only a few properties that are being improved, but I see a movement there, and I'll take a risk that I might take a loss, but the gains could be incredible. So apportioning risk and keeping your bedrock investments and every once in a while saying, I'm in a position to take a higher risk is something that you really ought to think about within the city, within the country, in terms of where you're investing. Finally, I want to talk to you about not having enough reserves. You know, back in 2004, 2006, when I was going out to California to speak to investment groups, There are crazy people out there. You know, there were people going, hey, market's never-ending cycle of going up. I'll refinance my house every year. I'll do negative AM loans. You know, man, I'm all in. It's like Texas Hold'em. Well, you know, that kind of investment doesn't exist today. You just can't do it that way. But I do see people getting extremely enthusiastic about buying real estate. When Warren Buffett says buy real estate, we all kind of go, well, I think I'll sit up and listen. I think he's done a lot of good things and been right about a lot of things. I don't want you to get ahead of yourself. You know, I'm a salesperson like a lot of people in real estate. I'm happy if you want to buy a lot of properties. But my job also is to make sure you're doing the right thing. Because if you do the right thing, and if I help you to do the right thing, you will buy more. So if it's a question of waiting an extra year to buy that third property and the fourth property, that's okay. Because what we're doing is we're building up those reserves because you want a low risk strategy. So if you go all in, it's high risk. So if you will obey these rules, and we'll talk about this and a lot more other factors there, and it's not to be negative, it's to be informed, because I believe if you approach it this way, if you approach it as not only return on investment and positive cash flow, but the amount of risk that you're willing to take, you're a more informed investor, you're a better investor, and guess what? For the people that have followed this strategy, they become the wealthy investors, one home at a time. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.